All right, good morning, everyone. Good morning, everybody. This is Carlos, your host with Mr. Juan. Welcome to
Good
Trading
morning,
Mission.
Carlos. Good morning, members.
Good morning, Juan. Morning, everybody. All right, so let's see here. Let me get rid of the question box. All right, so good morning, everybody. We got a presentation today for those of you who are visiting for the first time. Thank you for your time of being here. And let's get on pretty quick with it. So, a very good question to get started now that I have most everyone present at this point, I'm sorry, is Buena dia, Bando. Let's just get started pretty quick because the market is just moving, and unfortunately there's not much we can do, so we just have to jump ahead. So if you can press number 5 in your keyboard to let us know that you're here for the first time, you never ever heard about us before. That way we know exactly who you are and how we can address the information. Appreciate it. I'm going to go really quick with it. And the concept of you never heard or seen us before, you might miss the whole point of the analysis so far. Nobody? Press number 5 if you're here for the first time. Daniel T is the only one that I'm seeing. Travis is here for the first time. Well, Kelvin Diaz. Hey, nice. You're my family. I'm Carlos Diaz, so that's awesome. All right, so let's just get on with it. All right, Kelvin, welcome, Don, everybody. All right, pretty quick, guys. Welcome to Trading Mission. We are, just to get started, we are a professional oil and index provider for well-funded trader money managers specifically, and recently on the last 4.5 to 5 years to speculators around the world. We are a subdivision of OmegaBoost Trading LLC. Okay, so pretty quick, and today you'll experience how serious and professional traders increase their trading winnings consistency when applying our unique and exclusive award-winning daily market analysis that is averaging about 13% ROI per month, a little bit over straight month in the crude oil specifically, and the index futures as well. All right, and how you can easily apply it in less than 15 minutes each day on your trading as part of your arsenal, right? On your trading methodology, and avoid the most common trading mistakes that trader makes on a daily basis, which is paralysis analysis. Okay. So basically this is how it's going to work. It's subdivided in 2 areas. Pay attention, and the most important thing and the number one thing that I need you to pay attention to is the fact of this one right here. This is the one that you gotta pay attention to. Okay, and it means that we will provide you with a detailed, all right, market analysis or pre-market analysis, so you can just pretty much make a decent amount of you can have a decent amount of information, a well-educated information, before taking any decision in your trading arsenal or trading methodology, right? We will identify potential main trend on each instrument, and we will provide you with the tendency for the potential trend of either one of those instruments individually. So we're not only going to tell you that it will have a high probability of going either up or down or sideways for the remaining of the session. We're also going to provide you specific levels that if the market goes up, which levels on the top they're probably going to reach with high probability, which is pretty much our unique set of skills that we have. And the same thing to the downside. We're not only going to give you potential trend, we're also going to give you potential levels that it might reach. And these are good and applicable for about, pretty much the remaining of the session, even 24 hours, even 48 hours, depending as the market has. If the market hasn't moved on those tendency, they're still valid. That's all I'm trying to say. Okay? So we're going to give you a pre-market analysis. We're going to give you the main trend of the potential session. And we're also going to give you the potential outlook of that trend, or how far will they go eventually if they sustain. All right. As an additional bonus, if we see it fit, we'll take a live trade based on our own strategy, which is based on momentum and price action. That might not be your style, but that's our style. So the good thing is you can compare this with your own methodology and make even better decisions, right? Because it's a good thing. That we're not using specific indicators or whatnot. I'm just saying we're using pure momentum and price action. So in reality, we wait for the market to show us the tendency, and then we just jump with them eventually. All right. So you can compare that with your trading arsenal or indicators that you have and make even better and robust decisions in your trading. We will aim to take profits and losses based on our personal preference, not yours. Repeat, this is our personal preference, not yours, right? And we have our own personal risk tolerance, not yours. Press number 7 if you understood what I just meant right there. We will take profits and losses based on what we feel comfortable with, not you. Agreed? Is that clear? Awesome. Okay? I don't want anybody bashing or saying you did, you said, because we're not here to give you any guidance of taking or pulling the trigger, because we're analysts. We provide specific trend analysis and level analysis with high accuracy. How we pull the trigger, everybody's different on those levels. All right? Right? And the idea is the following. Is for you to apply your own methodology to our analysis. All right, so that's just pretty simple how it works. Right? We will provide you analysis. We will show you how we trade it. You compare it with your own methodology or trading analysis. This is what's the benefit and how this works. Okay. Try to turn off your cell phones at this point. If you gotta go at this point to the ladies or the gentlemen, this is a point of just taking control of your bowel movement. Ooh, too graphic, Carlos. Yeah, I know. Anyways, the point is that this is the moment for you to just take a break and go, because you might miss the analysis if you take too long. Okay. Warning. Here's a warning for everybody right there. If you're here for the first time, all right, this might not be for you, okay? If you're a beginner, inexperienced trader, you can't tolerate risk, never traded before, you don't have money to waste in the market, plain and simple. If you do not have risk capital of at least 10-20 on the CL specifically, this might not be for you. If you're looking for the Holy Grail, unfortunately, we're not miracle traders. We can't help you there. If you don't have a clear trade plan in place, we can help you develop one if you want and allow us to, but you should take a little bit of a time to develop one. If you don't have self-control nor discipline, trading is definitely not for you, okay? And if you can't afford to lose money in trading, this is not for you. Press number 11 so we know that everybody's clear of what we just said at this point, right? Following up. All good. Everybody's in the safe side. Okay. Now, this is for you. If you already have a trading strategy in place or a methodology, you're gonna make the best out of this. Okay. You should be able to understand that we will win and we will lose sometimes in trading. Accept the fact that there will be days where we will simply lose money. If you can't stand the fact that there's going to be a losing day, it doesn't matter who you are. It doesn't matter what money manager, how many billions you trade. There will be days that you simply are going to lose. You're simply going to lose money, plain and simple. If you can't tolerate that, you can press the X button on the top side and might look to do something else, because this might not be for you, okay? But if you at least have a trading capital, right, a full risk, disposable cash, so to speak, yeah, I'm putting it very blunt at this point, of at least 10 to 20, you're ready for trading. If you have some previous knowledge on how the market, how the futures market work, even better. Return of investment is measured at the end of the month, not per day. We will help you create a trade plan if you want. We have a very specific 2 full hours blown step by step. Watch over my shoulder. This is how it's done. Training on how to pull this off. But if you have a trade plan in place and a personal daily objective based on your methodology, right, on what you're looking for to earn from the market on your every time that you participate on a monthly basis, you obviously divide that by 20 trading days, and you should come up with a daily personal objective. It means you're really, really thorough in your trading, and you will have a high probability of success. It doesn't matter what you trade. If you're looking for an edge in your trading, we're certainly going to provide that to you. And most importantly, if you're looking to learn and grow in your trading account, this is the best place so far online to do so on a daily basis, okay? Now, my name is Carlos Diaz on the left side and Juan Alexandrino on the right side, my best student, protege, and now business partner at Trading Mission. And behind the scenes, we have Mr. Peter and Jimmy, who are in charge of making sure you guys are taken well care of. And together, the four of us create the dream team of Trading Mission. Okay, we opened doors back in May 2014, so we're being around a while. Question, are you qualified? Well, I don't know, but at least we can tell you that in 1998, I started teaching and coaching and mentoring other professionals in the industry on how to approach technical analysis for risk management on their portfolio, specifically on the Santander Bank in Puerto Rico. They hired us to, or at that point they hired me, to teach a local group of a pilot program of stockbrokers to use technical analysis on their decisions for the client. It was awesome. After that, word spread out, and the Caribbean business found out as well that I was hired as the main analyst for a small hedge fund in Florida to oversee the S&P futures market, and I was the main analyst, not the trader. I was providing what you're gonna see today is exactly what I was just doing back in 2001. So all I'm trying to show you is the fact that we're being around. This is not a fly-by-night, and no, we're not amateurs. We're professionals. Okay. So in 2015, we were awarded by Dr. Dean Hensley the Trade Titans Award, and I believe up until this point, 2016 was always award. I was also awarded, and 2017, hopefully, we still are on that prestige list. And all of this was based on truthfulness, transparency, and profitability. All right. So basically, this probably might give you a little bit of reassurance that we might be able to help in your trading. That's all I'm trying to say. All right. Our mission is to provide traders the most accurate market analysis, bar none, period. For 4 straight years, we've been doing so. We also respect your time. We're honest. We're transparent. And share our knowledge with you at all times, and provide great support if you need to as part of the Trading Mission community. But from you, we expect to be respectful, responsible, maintain focus at all times, embrace the information, and have fun at all times. And most importantly at this point, ladies and gentlemen, we have zero tolerance toward negative comments. I have no intentions of bashing everybody here or anything, or putting them out. But if I have to, I have no shame in doing so. We don't have tolerance for crap of everybody talking things that have no positive outcome of no one that shares their time to be here with us. Does that make sense? Does that make sense? Right? So trading is stressful enough just to have somebody BS stuff here, and batching things out, so you can keep that to yourself. Okay. Press number 8 if everybody's clear on our mission, and we're done. Sounds good? Thank you very much. All right. Here's how you're going to get the best out of today's analysis, right? Always practice our methodology in simulation first. Guys, listen, if you're here for the first time, do not engage in real trading until you understand what the heck are we doing. Agreed? Yes or no? Just type yes or no or why. Do not trade real time, real money until you understand what we do, because this is for your sake, right? Our style doesn't necessarily is your style, and the #1 priority for us is your safety. And then comes the other, you know, we can be friends and whatnot, but here we're trying to walk you through the process of how the analysis works, how you can apply it for your benefit if you see it fit. If you don't see it fit, don't take a risk with us because you don't understand how we do it. You don't understand the risk assessment that we do. Sometimes we're hardcore, right? And it's way too much. So we will use Unclutter, and you should use Unclutter charts to copy our levels. Pay attention to the detailed pre-market analysis. We're going to go through it, right? We're going to include our potential entry and stop loss if we see it fit. Write down on your trading journal the 3 potential outlooks or targets to the upside or bearish side as we provide them. Our suggested average daily objective, if the industry standard of 10 to 20 ticks, every average speculator, every time that they take a trade, or at least on the oil market, they go for 10 to 20 ticks. We suggest you to stick with that as well until you get acquainted with the analysis and levels and how accurate they are eventually, and then you can swing for the fences. But in the meantime, focus on what it's in front of you, and you're going to pretty much evolve and see the potential eventually as the market moves along. All right. We will close the room as soon as we reach our target and objectives, and we will not trade if we feel that the market is not in balance or safe to risk our fund. Very important. When we do incur any loss, we will try to make 2 further attempts if the market permits before sitting out on the market and pretty much call it a day, right? Pretty simple. If we see it fit, we'll take the opportunity to recover. But if we see, you know what, this is not going to work out, I'm not ashamed to say, it didn't work out, that's it, it sucks, boom, we're done. We'll wait up for the next day. Agreed? If you don't like this style of approach, then this might not be the place for you. Okay? When we will always follow our trade plan and rules with discipline, right? Sometimes I say, you know what, I'm not going to pull the trigger on my own, but I will continue to provide you the analysis because, as I said, you might have a better system to enter the market than we do, right? So you can use our own analysis with your methodology and kick their butts. It's plain and simple. Now you're going to have access to Chatzy, which is the chat box on the right side. It's our community area where we can share ideas and support each other. It's been amazing for the last 4 years. And these are kind of the comments, people sharing their losses, their wins, whatever that is, and their approach into the market and their pretty much experience with it so far, right? You can see here I'm coming up to my 7th month with you. I'm making around 18%, which is really awesome. Here's another one that you might be interested in. I've been following for about 6 months now. My account is almost double, right? I've been following you for a long time ago, says Greg here. Lee says, I discovered your trade room about a year ago, had 4 straight profitable months, got distracted, went on my own, blew my account, back as a member. Since January, my account is up 14%, right? I've been in this room for over a year. So as you can see, members are not all the fly-by-night. They stay with us because they embrace the information of the analysis and make the best out of it. So this is the most important thing. Here's one of our best members. My average daily profit has gone 40%, right, since joining Trading Mission. And here's the last one that I can just share with you so far. Last year, my overall count is up 42%, which is by far anything I've ever experienced before. You and Juan are really in the journal article. This is only to give you pretty much an idea of what to expect, and hopefully you can embrace the information that these gentlemen have done and make the best out of this. Okay, so let's just get on with the analysis, and here we are. So we got oil, NQ, ES, and gold. And let's just start with the main structure here so far. And I'm gonna once again, I'm gonna try to embrace the information. So I'm going to show you and explain to you what the potential outcome will be at this point, and explain to you what all this is all about. The first thing that I need you to pay attention to, the color-coded background here. We got kind of a brown box that you know, comprise all this area that I'm shading at this point, which is 48, 93, 94 area. To the 46 area, right? This region that I just showed you right here is what we call a choppy zone, unbiased tendency, and we call it the no trade zone. It doesn't mean that you don't have to trade within it. It just means that if you take a position within it, the probabilities for the market to react or being a little bit more unstable are higher than when they break outside of those ranges. Does that make sense, right? So this is not a breakout strategy. Once again, it just means that it's been proven for the last couple of hours that within the boundaries of the 48.93 region and 48.46 market has proven to be a little bit more choppy, or you know, unbiased in terms of tendency. And you can clearly see how the market. I'm gonna draw a couple of lines here, and you can see what I'm talking about. Right, I'm drawing the swings at this point, so you can visually see what I'm talking about, right? And in the last couple of hours, if we do this, we can find out that the market, right, could be sidewaying from this tendency. Now, you see a green arrow here. That's our own proprietary indicator. Don't ask. We don't sell it. It's not for sale, for in-out use only. This is pretty much indicating that the immediate and medium term, like short term and medium term tendency, it's most likely still bullish, and you should sustain a bullish outlook at that point only. In other words, it is highly probable that you will have more success if you place a buy than you placing a sell on the long term. That's what it means. That doesn't mean that you can't take a short position, but rest assured that if you do, you will encounter a lot of support against you, and might take longer for your pullback or short position to take effect, or mostly probably don't work at all and get stopped out, and so on and so forth. Meaning, maintain your focus and decisions only to take a certain positions at this point, which is buy setups and buy setups only. Which means that I can just go and place a floating order to go long to see if we have an opportunity or not coming up next. Okay. So so this is what we got. Excuse me. Now there is the no trade zone. Once again, it's from 40. I extended it from 48.90. 48.93 to 48.80, I mean 48.46, but 48.83 in the overnight session, for those of you trading order flow, it will look most likely something like this, right? So it is highly probable that if they break that 48.83 to 84, they might continue and burst towards the 93 to 94 area. There's only about 10 ticks of space, which is more than enough what we're looking for. At this point on oil, listen to me, the analysis is take buy setups only. Looking for buy opportunities on oil will yield the most probable outcome in success in your decision making, right? Today. And the targets to the upside, the potential objectives are going to be, if they exceed this 83 at this point, it's 93. I'm going to explain to you why I extended that no trade zone all the way up there. It's going to make sense for you right now. So if they break the 83, it's highly probable they're going to burst and move to the 93. I'm not taking that buy setups. I will explain to you in a moment the reason why. But that's going to be the first area right there. excuse me, that the market will reach. But I'm going to extend the no trend zone a little bit further more, just like I'm doing right now. And the reason for that is because, but I want you to pay attention to close up. There you go. The reason for that is really straightforward and simple. It says here in the overnight session that might be the high of the day, right? And if they break through it, they're going to try to aim and reach that 93, 94 area, 49.03, and so on and so forth. But for me to take this position to the upside, I have an issue. That the fact is that if I go back in time here, I notice that the market, every time that they reached this area of 48.90 or 89, that 90 to 91, and came back and reversed from it, right, is reaching a, it's working, I'm sorry, as a strong opposition or resistance point, indicating for me that they're just breaking right now, so they might start showing up the intention to move up to the upper side. And at this point, if they break above that 83 and close above it, the high probability of the 83, I mean for the 93 to reach are high. And also the 49.03 and so on and so forth. But because we have a previous close, a previous high right here, just below that personal objective right there, it is too close, and it's also too close to where the prices are right now, is not giving me too much of a reassurance for me to jump in and take a risk in this trade, because I know that I have less than 10, meaning less than the industry standard, less than 10 ticks, and I'm looking for at least for 10, an immediate resistance point, right, that has been proven to work strong just recently in the overnight session. And not only that, we have not one high, we got two highs. It means that if the market gonna go up, it will have a high probability to have a hard time going through this area, maybe pull back up a little bit and then eventually swift. Or perhaps maybe they will burst through it. But that's questionable. I have no idea. Why? Because they haven't tested, again, that high before. So it will make sense for me to see for the price to burst through this, indicating, you know what, they made a high, they tested once, they tested twice, but they just went through it, indicating goodbye previous high, we're making new ones, and a new ascension to new higher levels might be in control or available at that point, which provides a higher probability for me to see the market move without any interruption to the next levels up. Hope that made sense in terms of the decision making that we take every single day by using this structure and analysis ahead of time. Many times traders say, all right, I got a crossover here for CCI with a Bollinger Band and also a squeeze of I don't know what, and you know, whatever that is that you use, right? Stochastic, whatever that is, and then you go along, and you might be right. It's just that all of a sudden the market move and then start coming back down. You say, oh shoot, what happened? I have everything going up. What the heck is coming down? You failed to go back in time and find out that you were buying on a previous resistance point. That doesn't mean that your system was wrong. It's just you were buying on an exhaustion point because it's retesting a prior resistance, and they're going to provide that, the resistance, just a little bit, come back up, and then break it through it. And then this is what's going to happen. How many times you encounter yourself, position yourself into a trade, go against you, right? And you get so pissed off about the fact that you just placed that trade, the market was going good, didn't reach your target, go back against you, you liquidate your position, but you can afford for the pullback or the losses what it is. And as soon as you pull the trigger or get stopped out, the market reverse and reach all the targets that you were planning to reach earlier today on that trade. Does that has happened to you? Press number 7 if that's true or not. Yes or no? Right? And the reason for that to happen, guys, is because you failed to zoom out and checked out where are you standing at that point. Right? So it's so important at this point. It's so important to open up your charts and zoom out and make sure, just like when you're crossing the street, For God's sake. You just don't cross the street straight and that's it. You looked both ways, isn't it? Does that make sense? So before you take a stroll in front of you, you just stop, like we teach our kids. You look right, you look left, and then you start walking, right? It's really simple, but we missed because we're so embraced about the fact of all these new, shiny, beautiful objects and software that tells us what to freaking do, that we start thinking for ourselves. You are an analyst first, and then you use all the tools to guide you where you want it to. But you should be in control at all times, okay? That doesn't mean that you might get a tiny bit of a bump for somebody that it was driving drunk or something, right? But I'm talking about the fact that you got to be prepared ahead of time. So having said that, and hopefully that explanation kind of worked out, if we're saying, here's how the analogy goes in. All right, I'm going to go long. Wait. Look to the left. There are cars coming in this way. Look, does that make sense? But there's another one coming in. So we got a little bit of traffic on the left side right here. So we got to be careful. Okay. So why don't we wait, right, until somebody actually walks in first, right? And this guy just goes by that time afterwards. Probably you're gonna come back again and then take another, movement into the upper side, or so whatever that is. I'm just trying to make sense for you at this point that it is important. It is important for you to make sure to clear out all the hurdles or the support or resistance that have proven to be important before, all right? And based on your methodology, it will make sense to take signals or entry techniques or entry momentum, right? Right after all of those is, clear. In other words, you might have a buy setup here. It's going to work, but it's going to take longer because the market might bump from it because of this and come back and continue. But it will also make sense for you to be more disciplined and in control of your emotions and let everything goes in and start thinking, oh man, I missed that trade. No, you didn't. You wait for the pullback, wait for your strategy then again to set itself up again, and then take that trade. The probabilities of success are higher because now there's less noise. There's nothing left other than the objectives ahead. All right, that's pretty much the analogy kind of thing that I wanted to show you, and that is the reason why. Wow, so much crap to just let you know the reason why I extended the no trades on there. But I hope that kind of worked out. So basically, instead of saying this was the original analysis for us, this was the original no trade zone, right? Or choppy zone. In other words, this was the important high right there, 83 to 46, and look where the market stopped right there. What? Awesome! Look right there. You see, the market was down here before we started to talk and whatnot. Bursted, and just holding back down. So that's the actual key. It's a very important point of control, right? Volume trading, pushing back down as they have done before, right here, right? Reason why you don't take any trades. But then again, you see what happened in there? It looks like it might happen also there and with that in mind, which is just right ahead. So for me, it doesn't make any sense to take any long positions right here and encounter 5 ticks away. That hurt it again. Not for me. You know what? Let them have it. Do whatever it is. Oh, you can just go straight there to heaven right there. I don't care. I'll wait for a little bit or a pullback and then go back in again. If they want to go to the next route on the next level, we got plenty opportunities to the upside still. That for us to capitalize, but we want to be on the safe side. And if we get burned, it's not because we were reckless, right? If we got stuffed out, it's plain and simple, it didn't work out. The market didn't want to move. That's it. So that brings me to the other thing that you need to pay attention in every trading decision that you make. As day trader, you got one of two outcomes. Actually, let me do it this way. In here, You got one or two outcomes. You will either be positive, win, or you lose. That's it. There's no in between. There's no in between. And just embraced the fact that this is the outcome. Somebody will make money, somebody will lose money. Net sum zero game. You will either make money today or you will either lose money today. All right? So all this analysis or whatever, it's just to be pretty much on the left side here, on the winning side. But the analysis also help us dictate how far we can stretch the losses so we can still give it enough chance to end up in the winning side, right? In other words, managing the stop losses, the placements, or as soon as the market moves on, trailing the stops and whatnot, okay? This is where everybody's different, right? Everybody has their own style. You might not like my style. I guarantee it. I'm a swing trader. I'm not a day trader. So you might want to, let's just as an example, you might want to go along here and place a stop right in there. Oh, because this is how much I'm willing to lose. Wrong answer, right? Take a closer look at it. I'm going to show you if you're here for the first time and you're placing a long position here and you think you can go get away, you probably will. But you think you can get away at the long time by placing really tight stops? It might work, but I'm going to show you the reason that more often than not, it might not if you're swinging for the fence eventually, right? And let's just say that you go along right in there. I would place a stop, my stop initially, on the other side of the breach right here. This is kind of a breach, right? Something like that. I'm waiting on the other side. I'm just gonna, I'm away from the traffic. I'm put everything aside, away from the traffic, and just let it flow. I will either lose money or I will either make money. Does that make sense? That's it. It's just plain and simple that. Nothing else. There's no beautiful thing to put it like a beautiful love story here. That's what it is. All right. Hold on. Do you see kind of the tendency moving up, right?
That's it.
All right. Just let me know while I keep explaining. I'm not going to place a trade, but everybody, at least we can walk away and show everybody when we are supposed to trade or take a trade, which we're not because we're still in the range here. But at least so they can see momentum spiking up, okay? All right, thank you. All right, so where was I? Oh, yeah. So I will place myself right here on the stop loss and try to swing for the opportunity to come in. Why am I doing that? Let me explain to you something at this point. You're probably going to miss out. Remember when I said you always have to look back in time and see what the heck is going on with the market? Yeah, and I'm on a 15-minute chart on CL because it's the only one that has a little bit more clarity at this point. And you know what? Before I continue on, we're missing out. Oh, no, we're not. We're good. The idea of, let me just try to clarify the decision making at this point. This swing ranging area, breach, right? Or what we call the no trade zone. I will place myself on a stop loss below this area, and the reason is because you're missing out the information that the market has left behind. One of the key factors that I try to show people or my students every time that we pretty much go hand in hand, it's question yourself the first thing. What has the market done in the last couple of hours in terms of price structure, so you can deploy that in expectancy of what that they will probably going to do that again into the future. In other words, if you're going long at this, let's just say we went long right there. Where are you going to place a stop? Well, I'm willing to raise only X amount of money. Don't do that. Go back and be really diligent at this point. All right. Yes, we're going long. Here it is. Here's the second attempt on the high right there. So a break above that 83 will kind of trigger the continuation of a move to the upper side. Long-term perspective to the bullish, just pay attention to it. I'm trying to do two things at once here. So, all right, so what do you mean, Carlos? What do you mean study the price behavior? Well, just go back in time. What the market has done, every time the market goes up, what is the average pullback that they have done, so you pretty much have an idea. We call that price symmetry. So basically, what we do is, all right, I can see a drop here of about 29, good one. I see another drop here of about 32, good one. And this was a huge move up. Oh, I see the triple top here with another pullback right here. We can't measure it because I have an indicator, very simple, price action, that tells me about that, but we can do that manually. New highs, there you go, almost there. Pay attention to it. I'm not taking this straight, but watch it. It's going to burst and reach this target, and we have a hurdle right here. Here we go. Right. There it is. Yeah, same here, Juan. Thank you. So that's the first burst. Look, 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 look. Bing. See where they stop on the dime? So we're not wrong on the trend selection, and we're not wrong of possibly taking that buy. I'm not taking it, and I just explained to you why. Because it has a previous resistance right here, right there. And then we have another one right here, the higher. Wait, and we have the previous close and the previous high right here. Turn it, so many. Yeah, gotta give it a chance for them to slowly drill it through it. Isn't that awesome? Does that make sense? Yes or no? What's going on? I'm just explaining. Okay, so back to the analogy. All right, so where do you place your stop at this point? Well, use what the market has done before. You can see here, 32 ticks pullback, 29 tick pullback, and check this out. You take the ruler, and you take this triple top, and this single pullback, and we got a 22. All right, so what can I do with those numbers? I have no idea. Check it out. I'm going to show you. You take that 32, you add that 29, you add this 20, what was it? 32, 29, and 22. Divide that by 3, and we have a 28 average pullback. So that means that from my entry at that point, from the entry point, I can expect a 28 pullback, right, and still be right in the trend, because that's exactly what the market has done in terms of the pullback. Does that make sense? Yes or no? Yes? No? Cool? As the market makes new highs, that 28 pullback keeps rising. Isn't that make sense? Let me do it like this. From the high to the low, that's 20. So let's just put 28, 28, 28. There you go. Let's just put that 29 right there. I'm gonna then do this. From there, I'm gonna measure it with this line. I think it's better if we put it like this, so it's simply to follow. That blue line represents the pullback, right? So basically, I can do this. All right, so I'm aligning at the top right here with the high. So that means that they can pull back all the way down here and still be right. Oh, now I get it. So what does that mean? It freaking means that you have to give the market at least 29 ticks of pullback against you, and you're still going to be right on your analogy, analysis, or target, or trading decision. Does that make sense? At this point, it's not what you want, it's what the market is telling you, what is probably out there available for us. Darn it. So that means that I have to risk about 20-something ticks. That doesn't make any sense. Why am I going to risk 29 ticks and go for 10 ticks only, as you said? No, I didn't say that. I said that the industry standard, every time that somebody takes a trade on the oil market, goes for 10 to 20 ticks, which it's been proven that the market moves in that cycle, stops for a moment, moves in that cycle, stops for a moment, and pull back down, right? So in other words, in order for you to reach your target, that could be all the way up here, it might move in blocks of 10 to 15 or 20, come back down. 10 to 50 or 20, come back down. 10 to 50 and 20, come back down. It will never move in a single straight format, right? You can clearly see it right here, right? It didn't move in straight format. Look, it moved down, pull back up, move down, pull back up, move down, pull back up, move down, pull back up. And we were going, you were going short. It didn't went in a straight format, right? But if you were diligent, I'm doing the exact same analysis, guys. You're gonna love this. You see this downward move? You see this downward move right here? Check this out. Forget about the zone and whatnot at that point. Let's do the same freaking thing at this point. Look, what we're going to do. Oh, here's a pullback. I get it. Here's another pullback. Yeah, I get it. I get it. Wait a minute. We only have two. Well, two is good enough. So we got one and we got two. Those are the most visually represented at this point. This is pretty much what I have. Got nothing else. Well, we got another one right here, but this was a bullish outlook, not a pullback, right? So into the downside, there's the first one, there's the second one. Check this out. I'm going to show you how taking this one, right? And let's just assume that we went short on, I don't know, on the break here, on this support. Let's just say that we short right in there. So let's just do this. I'm just trying to come up with an entry here that makes logic for everybody. Kind of there. That's going to be the entry. All right, fine. Awesome. So let's do the analysis. All right. So it says here, because I don't quite see it, oh, 16 tick pullback. Wait, what? That's what it says there. Yes, exactly. That's price symmetry. It's what I've been trying to say. The market tried to move in tandems in sequencing. All right. So that means, are you telling me that from my entry point, I should at least give it 16 ticks? It could pull back against me 16 ticks, but then reverse and still being right in the trend? Yes, indeed. That's exactly what I'm saying. All right. So let's see. I don't know what the target is at this point. Let's just assume that we went short in the breakout right in there. Bing. Okay. So that means that we shorted what there, and from there I'm going to measure. You guessed it, 16 ticks back. All right, so it would be here. No, a little bit more. 16 ticks right there, right? You get the point, right? You're just getting the point. All right, so the market made a new low. That's our new stop right there. So I'm going to put this line right in there. Guys, this is class. I'm doing a freaking class at this point. So, all right. So the market went against us. Let's see what's going on. The market went against me, didn't reach the target. Oh, I mean the stop loss. It looks like they're going to go down, and boom, they move. What is the industry standard that we're going for? Pretty quick. What is the industry standard that we could look for at least onto the minimum objective? If we're going short, I'm just trying to make a quick demonstration of an idea here. All right, 10 ticks. All right, so let's just use this as an example. All right, Carlos, so let's just forget about what I want. Let's just forget about everything else. Let's just stick with that potential outcome. So we went short here, and we're looking for 10 ticks, where that 10 ticks comes into play. I said 10 to 20, so 10 ticks will be right in there, right? Check it out. Check it out. We went short there. We went short right in here, and the market did pull back in here, but we knew that the market could pull back all the way to 16 ticks and still be right. So the stop should be above that level, above, not right at it, for the love of God. It's just above that level. All right, the market pulled back up and went down, boom, 10 ticks. All right, so what if we went for 20? So 20 is actually down here, anywhere in here. So look what happened afterwards. Look what happened, and I'm going to show you at this point. I'm going to take this new low right there. The new low happened to be right there, and the stop went down right in there. All right, then again, the market made a new low right in there. All right, so let me take the red stuff. New low right there, and look where the stop is. Check this out. Check it out. The market eventually pulled back up. Didn't reach the 16 ticks, but we were you could allow it to go 16 ticks against you because you're still right into the trend down. And eventually the market moved down, and look what happened. Boom. The target would have been hit. Now check this. We'll step one step further. Let's just move it to the lower low right here. Look where the stop would be, the 16 ticks, right in there. Look what happened as soon as the market dipped and closed above those 16 ticks. It's the first warning that the price pattern of behavior that they were sustaining is being broken. Warning you, wait, we might reverse here. The market come back down and eventually went the other way. These are the secret tales, if you know what to look for. The people missed out, or traders missed out so much by not doing their assignments of understanding what the heck the market is doing recently, so they can exploit it in their decision making, or better yet, in their money management. How does that work out so far, guys? Does that help? I hope you learned today, because I mean, I'm going outside of the norm just to make sure that you get the best time of your time with us, and let you know that we're not here to only take trades. We're here to make a thorough decision making on our analysis, and making sure that every risk that we put into the market, it's at least one that has high probability of success, other than the fact that saying, you know what, let's just take a freaking trade and see what's going to happen, right? So there you go. Hope you learned from this. And this is only the class, right? Now I'm going to move on to the analysis. Darn it. Let me take a sip here. So far, make good decision, Carlos, because we didn't actually, I mean, that would have been a fake up move, as you mentioned. No, I didn't mention it. I just let it, you know, because I learned it. So I'm passing along the knowledge here. I said, look back. I mean, it's not safe to take a position until they break those highs, right? It doesn't. All right, awesome. So we wait. Yes, we wait. Let's just cancel this floating order then at this point. Yeah, let's just do that. There's nothing happening at this point. Oh, well, that brings me the other thing. What's going to happen today? Is there something that might help the market? You bring in, I use Forex Factory, you go to calendar, and today's 21st of August. There's nothing happened. There's no report. Oh, I see. If you go to the calendar, you can see here that today and tomorrow, no trades, right? But then on Wednesday, crude oil report. We got FOMC speaking at 9. It's going to be an interesting morning. Probably crappy day to trade the oil. Unemployment claims, interesting, 8:30 for the indices, and so on and so forth. So we we know now what we can expect. And by the way that I have to set it up, I'm only interested about the impact report that are medium and high impact, high and medium impact. That's it, nothing else. And I don't care about the other currencies, only the dollar. That's how we use this calendar for, right, when trading. So once again, all right, so let's just do the analysis at this point. Let me just go into the long term. Let's just now have some fun. All right, how can we say what's going on into the market? Right, so first of all, this is the kind of the long-term chart perspective. We're looking for buy setups on oil. I'm not saying that it's not gonna go up. I'm just saying we got to be very careful when to take a decision, right? So, but let's just read that long-term perspective of the market. Close your eyes, open your eyes, and try to dictate and let me know pretty quick, based on your personal assessment, what is the main trend of oil? Main trend of oil on all this chart. I'm just giving you a hint. You have to use all this information. This one full week. What is the main trend of oil at this point? Brian says up. Louis up. Cornbread has a very questionable decision there. I have no idea. JK says still short. Martin say down. Murphy says down. Junior down. Wally down. Taylor down. There you go. There you go, guys. Yes, it's a down trend. It's bearish. Yes, it looks like it's bearish. I mean, it's bullish at this point. Yes, because this is an impulse move that it moved down. But this is not the main trend. The main trend is, look, this is the important high. Let me put it there. That's the important low. And this is so far the high that they have left behind. And most importantly, this high that they have left behind hasn't even taken the previous high right here yet. You connect the dots. I love that puzzles. I love those puzzles. You connect the dots just like so. And what is the main trend? Level down. Exactly, Eric. It's kind of a impulse move down on the alleyway pattern with an ABC corrective mode that might questionable because momentum is up obviously based on what they have done on the last trading session, right? But it's an ABC pattern here, right? That might be the continuation of a bigger LA wave down. I don't know which wave are we. All I know is that on a bigger time frame, this might be a wave 1, it might be a 3rd, or it might be a 5th. I have no idea. One giveaway that this might be a 5th or the correction might start is to be patient enough, listen to me, and say, all right, so the market went down, came back up, but this high did not took what? This previous high. So I'm going to be sitting duck here, and I'm going to be holding my trades to the long position until this 49.32 it's been taken. That way I know that the pattern has been completely broken to the downside and the beginning stages of an upward movement might be at stake. And the potential would be to retake the prior high, which brings a pretty decent amount of points or ticks on our favor. So it's not until that happens that on the whole package here, this is a potential bearish outlook. It doesn't matter what the short-term bias says that is bullish, momentum says that is bullish. Yes, they're right. It's bullish based on what they're doing, which means, you know, sit aside, I'm not taking a trade. Because if I take a long position, it will either be a short-lived one, it's going to have a lot of hurdles against it, it's going to have a lot of pressure of sellers mounting it, as they have done here, 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 that it will move right in here. Reason why they haven't been able to break that level of the overnight high so far. Does that make sense at this point? But if you did not move into a 60-minute chart and you as a day trader focus only with your narrow vision of what's in front of you, you probably would have missed out the big picture. That doesn't mean that you're not or can't be successful, but that could be the difference of, you know, making 10 to 20 ticks than making 40 to 50. Does that make sense? Right? Because now I know that the main trend is down, and if this sustains itself and maintains itself correctly, you know what? If the guys break then to the downside, they break all this support area, they might try to go for the levels available around down here, which means the following. Show you. If they break outside of this, I'm going to show you. Hold on, check this out. Check this out. If they break, this is a no trade zone. If they break the no trade zone to the upside, here's what we got left. 10 ticks more until encountering the next resistance, or 25 ticks more until they encounter the next resistance, or perhaps even 63. That's more like it. On the downside, if they break the no trade zone, they will encounter possibly 12 ticks to the downside. Wait a minute, this is even better. 29 ticks to the downside, or even perhaps, right, 75. Wait a minute. So there are like a little bit further away, right, opportunities or bigger opportunities as a seller than as a buyer. Exactly, because we got so much resistance available that floating orders against the buyers are just too tight. They're back to back. Reason why this morning the no trade zone came to be all the way up to 83, and I said, screw that. I'm not going to use that. I'm going to extend it to 93 because I have to use what the market has done before to tell me that might be a fake out. And so far, it's been proven to be reality. Isn't that awesome? So anyways, that's the thought process. So what you think might be the outcome for you, you got to think twice. go into a bigger time frame, look at the big picture, and make more sense, right? So Mark says, so Carlos, will you be looking for the omega-6, or which is 6 to the downside with this chart and the top of this no trade? So no, Mark, I will probably go with, if I will go long, I will go for 6 ticks to 10 ticks. I'll be a scalper into the long side, which I'm not. I'm just saying as a day trader, to the buyer side, and I will be trying to hold for the targets on the downside. So to the upside, I will go for personal objectives. 10 ticks, 6 ticks, whatever we got left before encountering the next resistance. I will not even try to aim for targets, which is the levels. On the sell side, though, I will try to aim for the calculated levels. I will try to swing for targets. That's what I meant by that. Okay, Mark. All right, so far so good. I will explain the omega-6 in a moment. Let's just take the snapshot at this point. Wait, let me go to a 50-minute chart. Maybe. And then just, I think, there you go. I think this is decent enough.
Done.
All right, thank you. So we're gonna have access. You're gonna have access to the screenshots of the levels, so you can access them, guys. It's gonna be here. Here's the chat box. All you have to do is click on the top side, and you're going to see here that it's going to says 21, 821. And this link, when you click it, this is not the one, by the way, but when you click it, you will see a screenshot of the levels, so you can then copy them in your trading platform of choice. Sounds good? But okay, having me explaining all this so far, my take on oil is, yes, look for buy setups only, but since we are on a very unstable ground area, I would rather wait for the market to pull back down and then retake the high again, and possibly then I will probably join the force to the upper side. But if they come back down and they died in terms of momentum and tendency, I know that on the bigger time frames, I'm more bearish than bullish. So I'm looking more for the sell side and betting that the market will come down, other than the fact that it's going up. So even though that I have this morning the suggestion of buy setups only, I'm second guessing that suggestion based on the tools, analysis, and whatnot on the short-term bias, because the long-term bias, it's still bearish strong, and I see that it's more prone to go short at the long-term perspective than going long. That's all I'm trying to say, right? So I'll be very careful taking long positions, but I'll probably be a little bit more aggressive taking short positions. My take on the long perspective, I'm more bearish than bullish, even though that this morning is saying, you know, we're going long, focus on buy setups only, which one cancels the other, which means no trades for CL today. Makes sense, right? But if I want to become really aggressive and take any position whatsoever on the short term and focus on taking, you know, 10, 20 ticks, if it is applicable in terms of that is pretty much what's left available for us, I will be very aggressive on every buy. In other words, I'll take a buy. If I see some profits, I'll lock in some profits, or one tick, or break even as soon as possible, and try to see if they give me a little bit more than that. That's all I'm trying to say. I will be more worried becoming a buyer than a seller, right? Unless, once again, they come back up, they break that 93, 94. We see a lot of momentum spiking in, but nevertheless, even though when they do, the next hurdle is only 10 ticks away. All right, it's only 10 ticks away, which is not much for my appetite at this point. All right, so but we'll see. We'll see. Once again, I'm a little bit more long-term perspective bearish, but right now the day trading, the short-term buyer, it says buy setups only, which one cancels the other and brings me the mentality of saying I'm going to be a careful buyer today. If I will buy, I'm going to be really careful. I will look for immediate profits. I will look for locking in some profits as soon as possible, because it's a little bit unbiased for me at this point as the analyst per se. Okay. Let's just bring in the NQ. Now that you know how the whole freaking thing works, now it's easier for me to explain the other ones, right? So we have unbiased market. You close your eye, open your eyes. What is the main trend with all the information that you have right here on the NQ in front of you? What is the main trend, including the last 3 sessions? Thank you, Murphy. Yes, so far. Anybody else? Don says none. And most everybody says sideways and down ranging. Good point, Jay. Yeah, down ranging. Is ranging at this point? Yes, it's unbiased, but the main trend obviously is to the downside, which means another trick of the trade. Imagine a world with perfect trading setup. Now, anyway, here's important high, here's important low. So let's just imagine this as a big, huge candle. Okay, I'm doing a candlestick pattern right now. What? And let's just assume that the market is just right in here. So this is pretty much where they are. I don't know, giving you an idea. So if this is a huge candle and the prices are right here, I was taught that on daily chart price action, really interesting. If prices hover and closes on a candle on the 25% above or below of the whole candle, the most likely scenario of the tendency afterwards, it's that direction. So in other words, if this guy's closed below here, this over here is pretty much below the 25% of the candle itself. Does that make sense? If it closes over here, it has a high probability to go up. It has over here, blah, blah, blah. So assuming this is kind of a daily chart. So this means that these guys are hovering on the 25% lower end, which means that the main trend tendency is where? Clearly down, right? So hopefully that's going to sustain. Now, fast forward here. Wait. Take a look at the oil. Darn it. He was right again. Stupid Carlos, how he does this. So, unbiased market. At this point, it's just suggesting, which is very unstable. They have no tendency whatsoever. So we did the whole analysis, including the couple of trading sessions, right? And right now, we have a no trade zone between 81.50. Get that, and 28.25. There you go. So this is a no trade zone, 58, 28.25, 57, 81.50. It's a big range, I know, but this is swing trading. So analysis, and this is the only thing that I have. So in other words, between these two, look, I'm not BS anybody here. What I'm trying to say is that between these two areas, the market will most likely tend to be very unstable. You go back and check what's going on. Yeah, market went up, burst up, and no, went down. No, went up. No, wait a minute, it's going down. No, no, I'm going up now. You know what? I'm going down again. Wait a minute, let's just go back into. No, I'm going down now. You see what I'm talking about? Does that make sense? This is ranging. Reason why this is a no trade zone, or whatever happened between these two regions, it might become a little bit unstable. It won't have a clear trend selection identified or defined at that point. Now, on the other hand, this is trending, right? Trending, no trending. So it's sideways, slightly bearish. Everything can change, of course, as the market opens at 9:30. But at this point, short-term bias, short-term is the last couple of hours. It's telling me bullish, yes, but now I have to read between the lines. Look, wait a minute. So you go back, and obviously this is kind of all craziness going on. And here's what I'm talking about. Okay, so for me, it is important how that they need to take. I'm talking what I have in here. This is the low that they left behind. This is pretty much the lowest low that they've done. This height took the prior swing higher here. This is bullish. The market came down, and this low did not took this low down, so this is still bullish. So we have bullish price action tendency. Okay, that doesn't mean I'm going to go long. It's not until they break that 28.25. But so far, price action structure is otherwise telling us that their intentions to start doing a bigger pullback are probably starting to develop. So it's not until they take that 28.25 that I might be able to join the forces with that. Why? Because if I decide to do anything within these ranges, based on the price action structure that they have done before, this could be a no man's land. I can find myself in a lot of trouble. I notice here, and now that I said that, that's saying, wait a minute, it might be right, because now it's a double top formation going right there. So you know what? The main trend is down. So long-term perspective bearish, and short-term and mid-terms are bullish, indicating a very unstable market, or sideways, slightly bearish into the long-term perspective until they take this 28.25, right? But if they take this 81.50, the probabilities for the market to continue down are higher, because that's what the main trend is all about. Okay, so this is a non-trending market, right? So good choice for those of you who actually decided to make that your decision on NQ. But I would say this is a bearish outlook, right? Slightly sideways, and I would be looking for a potential sell setup below the 81.50, or based on the price action recent analysis, it's warning me that they might be getting started on a bigger pullback. But if they do, I will better wait for the 28.25 to be taken, to be clear that the 39.75, 49.75, and 69.50 might be the next upcoming opportunity. So I could wait, be patient, disciplined with myself, and say, I'm not even going to take a look at this, guys, until they hit that 28.25. And the opportunity for me, once that's probably taken, I have an opportunity to make 11 full points on the first objective, 21 or even 41 full points on the NQ as a buyer if I am patient enough. Does that make sense? And the same thing for the downside, though. The only problem here is that if I go short, I have to pay attention to the last double bottom right there. You can't forget about those. I just talked to you about that on CL. But if they do, from there to the retest of the low is 8 full points, and we're typically go for 5 to 6 full points in NQ. More than enough. I'm saying, all right, main trend down. If they take this, okay. So from my potential entry to the first hurdle or support, 8 points, that's more of what I'm looking for on a personal side. I'm probably going to be willing to take that trade to the downside. Awesome, because there's more opportunity than my objective. But if they go through it, then probably 25, probably 49, and probably even 69 full points to the downside. Will that happen? No idea. I'm just prepared ahead of time of most likely where they will go if they move towards those levels up and down. Let's just take the snapshot. All right. All right, here we go. It is applicable, obviously, for the indices to be traded after 9:30. Give it about 20-minute threshold, and you're probably going to see some clarity of their intentions. I'm just saying. They just move on to the E-mini S&P. I'll just take the snapshot because I'm not going to be really thorough on this one.
Right. None.
All right. So basically, once you get acquainted with the way that we do the analysis, right? Obviously, we're doing a little bit more of a show today because we got people visiting. But basically, I'll go a little bit in detail of the price action structure. So, but it's the same thing. Close your eye, open your eyes. Main trend down, a little bit sideways, lightly bearish. All right. Awesome. So no trade zone. 31.50, 21. Right? If they break that to 24.21. They will hit 1775, 1425, and 240750. 3 layers down. Those are the 3 targets down. Probably might have another one for daily or swing trading, but that's not applicable at this point. If they break above the excuse me 3150, target or objective should be the point of control of prior swing trade high of 3450. 39.25, 43.50 to 44.75, 48.75. Okay. And you notice here, wait a minute, what are those yellow boxes and purple lines and whatnot? So we have a personal code of, or a legend, if you will, that tells us from different time frames where we can just fine tune at different levels from different modalities of analysis. And we also compare those with, and we're subscribed to one of my mentors' personal, levels kind of thing. So we ask those analysis, after we're doing an analysis, we ask for those levels on their analysis, we compare them, and whenever we combine the levels coincides with each other, we turn them into purple, okay? But whenever we find that we're missing out by, I would say, 5, 7, 10 ticks of difference in the oil, for example, then we combine them as a power zone. And it's extremely powerful. The green boxes has a lot of floating order against the main trend. In other words, if the markets start moving up, and right now on the E-mini S&P as an example, and they start hitting anywhere from 29.25 to 31.50, there's going to be a lot of floating orders of seller pushing the market down. And that has proven to be the fact every time in here. You can see it here, see it there, see it there, right? Basically, this translating to those ranging areas. So just that we, use many other modalities or analysis just to be a little bit thorough, specific. You're going to be surprised at the levels and the targets as times goes by. You start seeing development and be surprised by them. Okay, so but it's nothing magical. It's just that we combine like 7 different analyses into one and fine tune and find all these areas, and then finally ask for reassurance. If the big players are having floating orders in the same levels as those, then we color code them to make sure that's what's going to happen. One that you took the snapshot.
Yes. I took.
Right.
We're missing gold.
Yeah, gold. I gotta go with gold now. Oil is going down. You see it? It's reset. All right. Did we do CL? No, we haven't.
Yes. We did.
You did? Ah, you did. Okay. All right. So once again, I'm a little bit more bearish in the oil market, and once we break the 46, I'm expecting the market to drop to 37, 34, 48, 19 to 16, 70, and we probably have another. Yeah, we're missing one. Let me know if you have the 93. Wait, there's one that we're missing. Hold on. I know there's one that we're missing. 47 something. 47.90. Point of control. Okay, here it is. Can you verify the 80.1990? I was missing that one.
Second.
I think that. There's a double top here at 90. Transition 91. I think it's 90. Just double check. And here's another one again. 2 more. 90. 90. I think it's 90. Anyway. So once again, if the oil reverses and start coming back down, my potential objectives to the downside, once they break the 46 area, is that the oil should reach 48.37 to 34. That's a power zone. Kind of floating orders right there to go along. 19 to 16, 90. That's an important level that I forgot to put in there. 70 and 37. Now, to the upper side, we're still kind of bullish. Price action structure is bullish into the short-term bias. Long-term perspective is bearish, but nevertheless, momentum is momentum. So momentum still bullish at this point, which says focus on buy setups and buy setups only. If that would be the case, a break above that 93 will trigger 49.03, 19, 57, and 54. Actually, 54.04 is going to be 54 even now. Right. I think we have, I'm missing another one to the upside. Let's see what it is. And this 19 turns now to 21 and it's purple. Okay. And then what was the other one? Yep, that was it. That's it. All right, they're coming back up again. Peter, yes, 20 is something depending on your entry point. Going for 20 points on or 20 ticks on CL is doable. It's applicable, assuming the fact that you are able to withstand a couple of pullbacks. Here's a quick question for everybody. What was the average pullback that we should have allowed the CL to go against us and still being right on the main trend? Pretty quick. Come on, let's see everybody remember. 28, there you go. 28 to 29. Let's see what the market has done. Survey said, oh, what? Isn't that awesome? So let's see who won. Mr. Murphy. Okay, now let's see. Isn't that awesome? Murphy got it. Wally got it. Jay got it. Didn't we predict that like an hour ago? Come on, guys. Don't hold it back. Let it go. You can say, darn, yes, holy shit, oh my God, yeah. That's awesome, right? Guys, it's just, I mean, we can walk away today. I don't mind taking a trade or not. I'm not yet because I don't feel comfortable with it. But didn't you learn something today from this freaking amazing analysis in terms of using price action alone, right? So yes, you learn all this stuff, right? So let's say this is simple stuff, but how you can apply this on your trading, that's up to you, right? It's depending how aggressive you are, all right? So I got colleagues that actually blindly do that and start buying the crap out of the thing on the rejection of this area, right? And so on and so forth. It's applicable on your style, but you learned something today, right? So we nailed it by the tick, guys. It's just awesome. We use this swing down, we use this swing down, and obviously based on experience, we use this triple top with a pullback down. Added them all together, we averaged it in, and boom, that's pretty much what we were expecting the market to do, right? Here's the thing. You probably say, I mean, I went long right in here. Going back into the same analysis, I went long in here, then and now they're coming back down. You liquidate your position because you can't afford that pullback, but you fail to do the assignments, understanding that you at least have to give the market at least that 28, 29 pullback, and they were still being right on the trend. And all of a sudden, the market you liquidated it right here at the bottom, say, I'm done with this. I'm assuming my losses. Thank you very much, and the market start coming back up again. Oh my God, they go against me. I don't deserve to live. I'm not a good trader. No, you're not doing the due diligence, right? So walk away knowing for the fact that you got everything within you to be really great at trading. You are good at trading, dudes. You can do whatever you want with trading. You just have to do your due diligence. Okay? Hopefully we can help you with our analysis, make it better. But I wanted to tell you, don't let anybody tell you the crap that, hey, you know, trading is difficult. It's not difficult. It requires time to study. Maybe 22 years, but it's good. I mean, just kidding. But I'm just saying, right? Right. Okay, Juan, these guys are, right now they became too aggressive for his style, dude.
That's it.
It's too much. I'd rather walk away today with a good presentation than, you know, trying to 19 one bar. No, I'm not in. Okay, so don't place any trades on the accounts. Forget it. Just wait. I don't like it. It's too aggressive. 28 ticks by tick. All right, this is awesome. All right, let me just do what we're missing. We're missing gold, right? Yeah.
Gold.
Yeah, I hate gold. But anyways, here it is. Now this is unbiased. Look, I'll go with the questions in a moment, guys. So market will go up, to say go down, and then a retest and failure to the top, to the bottom right here with the swing high right there. It's a these guys are going all over the place with a huge swing. So there's a lot of opportunity to trade this big range if you have the guts to do so. Okay? I don't like gold. I just do the analysis for it and clients. That's as far as I can go with it. Nevertheless, tendency on gold at this point is completely unbiased. Completely unbiased. Right? And what we see here is a no trade zone is to 95.30. For those of you trading gold, you know how to trade it. A break above that 95.30 will hit or trigger 97.60. Please use the correct decimal points, right? Because I don't have time to change them. Then we have a 12.99, 13.20, and 13.0250, and 13.0580. Okay. A break below 88.10 will trigger 80.86, 83.90, 82.40, and 80.9 to 80.4. It's a power zone right in here. So multiple targets. Would like to provide at least 3 and kind of a bonus one. And it would be 1, 2, 3, and a bonus one right here. Okay. Let's just do the snapshot one.
Done.
Awesome. Sharma has got 2 contracts at 22 ticks total. There you go. You're done. Awesome. Great trade, Sharma. All right. So there you go. You use the information, hopefully, and make pretty decent decisions on your trading analysis. All right. So. So guys, unfortunately today I don't see anything boiling down for the way that we like to trade, and even more in front of people, because we would like to keep everybody kind of in the safe side. And so far, this is not the price structure itself. It doesn't prove to provide anything rational for us to take a decision, right? So for those reasons, we're probably not going to take any trades, just watching on the sidelines. Having said that, I really hope that so far, if you've been here for this morning, we have at least opened your eyes in how to read the market and perceive the potential of knowing ahead of time what to expect from the market. The question is, how beneficial would that be for you, right? Knowing the fact that that long-term perspective here on CL might have been a fake up move and we stood out. Knowing the fact that if they were going to pull back down, it was going to be an average of about 28 ticks and stop on a dime. How would that, it doesn't work like perfectly like this every time, but I mean, it sure beats the crap out of not knowing anything, right? The long-term perspective and the bias in the oil market is still bullish, looking for buy setups to buy setups only. And that's what the analysis says on the short-term bias. I just added up the fact that on the big time frames, we're on a big, huge downward move, which brings a lot of pressure to the buyers, right? Does that make sense? So even though the short-term bias was, as day traders, looking good to buy setups and buy setups only, yes, it's okay. Since there is a long, big, huge downtrend tendency in the bigger charts, indicates that it's, you know, the buyers are going to have a really hardcore time going long. That's all. So we got to be very careful, stay on our buy sides, take profits as soon as possible, right? And so on and so forth. But so far, for those reasons, I don't feel comfortable putting anybody at risk here, and not even our money into it. But nevertheless, I think that the analysis has been really good and spot on so far. Eric, thank you. Yeah, for the comment. Yes, inside. It's a lot of, you know. Hey, you know that's the name of one of our websites, Force Side Effects. We do we do analysis for the currency market. So it's awesome that you use that word, foresight. All right, so let's see what's going on here. We got comments. All right, so far so good, guys. You're enjoying your time here today. All right, so we're here. We got, okay, let's see, 8 years I used. Feather, wow, are you dealing with these people right now? Yeah, we got a client here, a member that had a problem with TradeStation. Okay. Thank you, Feather. All right, Feather, it says that if you're using TradeStation at this point to trade futures, be wary that they are having a lot of issues, and he actually lost. Can I share that, Feather? He lost money on. Wow, it sucks. And then they figured out that they have this issue, and they never actually explained it to the client. So anybody trading on TradeStation, be aware of a situation that's going on right there, okay? Thank you for sharing it, Feather. I'm really sorry about that, man. Yeah, reason... okay, yeah, Feather, I use, the only thing that I use is kind of an order flow. Oh, there you go, we're going short. Do you see this?
See it?
Let me know when you have confirmation. I know that it's against this guy's, but or maybe not. Wait. Well, yeah, it's there. It's It's a 46. This looks good. It's kind of good though. So far, guys, the long-term perspective of analysis, I said that I was a little bit more biased into where. Anybody remember? Down. There you go, Taylor. Man, okay, myself, me, myself. That's a good name. Exactly. Let's see. We hit it. Maybe we don't. Maybe, I don't know. This is too volatile. This bar. Do you see one single bar? Too crazy down. I'm not going to join them. It's too volatile. But nevertheless, let's just go along. You just go along with the analysis, which is the most important thing right here, right now. Okay? Which is, first of all, spot on decision making on the analysis. Number one. Fake up move to the upper side. Number two, even though this looks bullish and the short-term bias it says go long, I filter the fact that I didn't like it based on price structure itself, and I explained to you the reason why. Number three, we said that if they're going to pull back, they will pull back an average of 28 ticks. Remember that? And we spot on, nailed it again. And we mentioned, as we explained earlier, that if they break through the 28, it's a potential for reversal. So far, boom, that's a sell setup right there at the 45 to 46 area. They just touched the bottom side of the no trade zone for the first time. So that's going to be kind of the giveaway of their intentions, the second actually giveaway of their intentions to continue down. They dipped and went through 46, meaning 37 to 34 is next, 48.19 to 16 next, and 47.90 possible next, and 70. So although I'm not going to take the live trade here, I want to walk you through the process of the analysis. Next level down, 37 to 34, and that will complete the full-blown live trade analysis in front of you, right? Feather, yes, Ninja Trader is the best so far. Absolutely. Great job on recovering that, man. Appreciate it. Wow. All right. So I'm proud of you, man. All right. Awesome. All right, so here we go. They already gave away the fact that their intentions are here. Next level down, 37 and 34. Once they hit that, we can say that we completed the cycle either to the upside and downside. You'll see in a moment here. Well, I have 47, 45 confirmation. Here's the question: where would the stop be? You already know the fact of the stop loss. Let's see. Hold on. Wait a minute. So this means that this pullback right here, no, it can't be. 22, right? Take a look at this one right here. 23, spot on one of the levels that we used, which was this triple top to this double bottom. 22, holy shoot. Nostra Carlos. Anyways, no, it's just right there in the charts. It's right there. You just need to know what to look for. So if that's the case, I got 22, 28. What we're talking about, I would say 29. So I can place my stop 29. No, 28 ticks plus about 3 ticks. So 28. That's a little bit harder than that. So stop could be pretty much right there at the 75 to 77 area or so for swing trading, that is. Okay. JK, yes, we do use the VWAP, yeah, volume weighted average. We do. I use them just to have an idea as well. But I use it on kind of a bigger charts, by the way. I don't like using in this. All right, next,
again?
yeah, same here. Next level down, 34 and 48, 19 to 16. Stop is, let me just help everybody. I'm going to place a stop. I'm going to use this line. It was what? 20, it was 76, right? Let me see. Swing trading stop is right there. Let me use a different color. I don't know. How about deep pink? Ooh. Omega 6 is just, thank you, Combrett, for sharing this with the members, everybody. Yeah, I remember that somebody asked about it. I apologize. I'm just really, I'm just really focused on the analysis at this point. Feather is, you're more than welcome. I'm so proud of you. All right. Yes, you are. You have evolved. You're doing an amazing trades. I mean, it's awesome. Awesome. So thank you, yeah, for allowing us to teach you as well. Yeah, Feather says that I'm very proud. I have the same levels for the trade with you. I got a lot from you. Thank you so much. Absolutely. All right, so now why didn't I didn't take this trade? Let me explain to you why I didn't take the trade. This single bar right here, the 10-minute bar, it's really nerve-wracking. One single bar with way over 30 ticks. Let's see. More like it. Yes, it's something that is, you know, something to pay attention to. What I mean by that is this is an impulse move down, which is good. It closed with kind of the 20% down. That's a bearish outlook. They dip below the no trade zone of the 46. You see how they're holding so far. That means that these guys are starting to develop the tendency of a reversal. So good analysis of spotting a fake up move here, right? Now take a closer look over here on the indicators that we have. It's just turning short-term bias, just turned bearish at this point. Spot on, right? So we're forecasting at this point. We're predicting the absolutely transition from bullish to bearish, as I was focused on the big time frames at the beginning, right? So far we have nailed all predictions in terms of the movements and what to expect. I haven't been able to trade them. Why? Because we're still inside the no trade zone. Hence, that's what it says, no trade zone. I would have probably placed a long position inside the no trade zone if I would have had everything backing up the bull size or the bullish side. I'm sorry. But since that never happened, that's the reason I decided just to step away. And I'm not going short because it's still mixed. I'm following with diligence my own rules of engagements. Okay? All right, guys, so far so good. Any questions up until this point based on the analysis? If you're here for the first time, so far so good. Do you think so far? What do you think so far about the analysis? Is it something that is applicable to you, or is just too many BS, or whatever that is, right? You can say I'm giving permission. I don't care. I hope you found something of a little bit of nugget. And the reason I just went into the extent of explaining today because there's no trades. So instead of saying, sorry, no trades, let me just clock out of here. See you tomorrow. I want to make sure that you make time to be here with us. So we would like to, you know, get you back the most of your time. Time is a commodity. There's no way to recover it back. We might as well try to make the best out of it, just because of a way of saying thank you for being here with us. All right, thank you. Awesome. As long as you're finding value in it, that's all I care about. So it looks like the 9 o'clock. We're right now in the tipping point of using price structure, time and price relation. 9 o'clock opens the oil market. So far, we kind of detected and played out by the T. The TC1 asks, what would you go short if you were trade around this area? I was short right now. I said I would have shorted right there at the 45 area. Yes, 45. That's the key. That's the short. Looking 37 and 34 coming up next. As a matter of fact, it looks decent. Nicholas, thank you for your comment, Nicholas. Phenomenal analysis, definitely the best part of this session. Absolutely, Nicholas. Thank you for letting us know that you get value out of it. Thank you. TC, rest assured, my stop would be way beyond 76. So do not try to say or start asking me about risk-reward ratios and all this stuff, because I do not play by those. All right, I explained to everybody why is it that I decided to use stop losses like that. It's based on the swings, and we already proven that they are spot on, right? Once again, on the long term, assuming you took that long position, whatever, right? Let's say you went long in the breakout here, right? And you were trying to swing for the fences over there. All of a sudden, the market goes against you just like this. You would have been obviously taken by surprise and saying, you know what? I'm assuming some losses, because this is typical, including myself. We go out, and all of a sudden, the market reverses and whatnot, and you say, oh my God, they played me. No, it's because we pretty much failed to go back and identify and analyze what's going on with the market. Okay. So that stop loss placement is based on the average of the pullbacks that we have seen so far. So we're not changing anything at this point, right? It's a really methodical way of selecting where to place our stop, still being protected, and still giving enough space for the market to do its thing, right? Now the objective downs are first support area, 37.34, second support area, 19 to 16. Third support area, 90. Fourth support area, 70. Right? Fifth, 37. Right? You pick whichever you feel more comfortable with, and you build your own risk-reward ratio. But the suggested stop loss has it still has to be the 48.78 based on swing trading. Okay. Feather, thank you for sharing that. You're awesome. Oh man, have fun. I really enjoy reading that, because I know this is exactly what we're looking for from trading, right? Be done, happy, and enjoy life. Awesome, my man. I'll keep that between us. That's great. Where would you go? Okay, Tim says, hey, Carlos, on your chart, these swings have numbers of ticks below them. Yes. What indicator? It's called. Tim, it's called Price Action Swing Pro or something like that. We got that questions a lot. That one is, let's see, Tick Hunter. Believe it or not, yes, it has. It will have, and we were discussing this earlier with a couple of colleagues. It will have impact in the trading today. Tick Hunter says
did you factor the eclipse into the calculation today? I know that it sounds crazy, guys, but it will have an impact into the market today. That's for sure. Believe it or not, I don't believe in no crap either, but it actually it does. A good question, Tick Hunter. I don't use it for taking decisions. I'm just saying it will affect it. Absolutely. Okay. Eric says, yeah, that's why no trades. Absolutely, JK. So no ATR multiples for stop losses target. No, I don't use none of that. None of that. Sometimes I use ATR. Excuse me. Well, JK. Sometimes I use average true ranges and multiply them by 2.5, right? And that's my preference. Sometimes or two, between two to 2.5 times. But sometimes I kind of like the price action structure itself. Okay. But it's there you go. If you use 2 and 3, that's perfect. I use 2 to 2.5, so you're spot on. Great job. And ask what kind of impact. And you're talking about the eclipse. I'm just saying that many people would probably take the day off and don't trade. It's nothing magical behind it. It's just the fact that, you know, it's kind of a, you know, superstition kind of thing or whatever. I'm just waiting here for the next rundown on CL. Once my targets of 37, 34, 19, or 16 are hit, I think we fulfill our objective of demonstration today, demonstration purpose only, and it's applicable for those of you who are still here with us and you're here for the first time. By the way, if it is not much to ask, once again, guys, if you can plain and simple just say, or typing a number, like let's just choose number 6. Can you type number 6 if you're here for the first time with us? So that way, exactly who you are and that you're still with us. So that way, I know that you're walking away with something really, really good in your hand. So, all right. So members, let's just give them a warm welcome to MS, Rado, JJ, Ma, M-A-H, Ma, Daniel T. Thank you for sharing it. Feather, please just let me know. Yes, indeed. Absolutely. I'm going to send you a couple of the guys just came over. We had a nice launch. And send privately. So Feather, type that in and send me a text. Yeah, this last weekend we went to Sarasota and it was beautiful beaches right there. I'm like, we fell in love. It was awesome. All right, so it says here. Welcome, JJ. Pat says, thanks. Now I can see clear path to our children going to private schools. Thank you, Pat. Kim Fi, MS, it's a price action. I think one of the members before shared the link. I think Big Mike's forum. That's what it is. Just do a Google search and you'll find it. No, it's not for NT8. I'm sorry. It's NinjaTrader 7. Yeah, NinjaTrader 7. Any books or recommendations? No, not for training purpose, but for motivation, one of my favorite books is The Pitbull by Martin Schwartz. Just so you know. I love that. I mean, it's really awesome. It's a great book. Other than that, I read many of them, but there's one that says The Float, based on price action. That's another one. That's a good read. The Float. You can find them on Amazon. I have plenty, but those are privates in terms of what we do. I mean, I don't have any. I'm just trying to glance here if I can see. The Inner Game of Trading. That's a good one for psychology, by the way. That's it's a good read. Wait. Oh, Feather. Yeah, same here. Feather. That's my from Puerto Rico. So that's the reason for it. I'll send you a text. Let's see. Does anybody been listening to this song? What was the name? Suavecito. That's la canción. ¿No? Sí. Suave. Despacito, ¿eh? Esa es la de Luis Fonsi, right? Suavecito, despacito, whatever. That is #1 worldwide. Yeah, when Puerto Ricans know how to do things, right? Yeah. Stupid bastards. Oh, let's see. I got 6. Okay. Waiting for 9 o'clock open, see what's going on. There you go. All right, so let's see. Coming up, 9 o'clock is here. Let's see if it helps us or break us. Once we reach this objective, I say that we probably pretty much call it up pretty nicely. But if not, well, it doesn't. Take a look at the tendency is shifting slowly into the transitioning bearish outlook. I have no idea if this is going to sustain or not. They're still fighting within the no trade zone. We need a clean close below that. Feather, I send you a text. Let me know if you got it. No idea. Let's see. How about divide this? All right. Sweet. Let's see what's going on. Taking all day. MS, here's the thing. This is what the question is, how accurate would the analysis be at 8 to 11 p.m. tonight? I'm assuming Eastern Standard Time, right? Well, here's the thing. Our analyses are really, really spot on. The problem is that we have no idea how long would they take, right, on reaching. I hope we do. So is not, I think the answer would be, is they're still good until either one of those are hit eventually. So in other words, they do not cancel or they change. They are good until either one of the extremes are hit and reached. As you can see, we're still battling inside the no trade zone, which means, as I explained earlier, the probabilities of the market being really, unbiased are stronger, right? And so far they dipped, they will top right there below the 44, indicating a possible indication of a bearish outlook, right? And the tendency to continue down. But nevertheless, it's still inside the no trade zone. How far would they take to break outside of it? That's outside of the scope of our understanding. That depends. All right. I mean, so I have no idea. Sorry guys, there's nothing else for us to do here other than waiting. So far, spot on since the morning into the decision making of not doing that. I'd say it was still bearish at this point on my take because the giveaway was right in here. Let's see if they continue. We explained that based on swing trading analysis, right? Let's just assume this is a bearish look. Target is going to be that 37, and the stop should be based on the price action structure that they have left behind, right? So far so good. Moving down, 37, 34, 19, and 16, and here we go. Let's see. Coming up next. $9.09 by 9:15. I would say 9:15 we should see the target being hit, hopefully, or a full reversal back up there. There we go. And almost there. And oh, come on. Give me the forecast. Give me the forecast. Give me the 37 and 34, guys. Come on. Makes us look good. Makes us look good. Come on. Saludo, Junior. Hello, Junior. From Dominican Republic. Awesome. So let's see. Come on, guys. Any moment now. Taylor got 12 and 10 on CL flat. There you go. Kim. MS, I'm not taking the trade live at this point. I said I'm going to take a stand as analyst today because I didn't feel comfortable with the the structure itself. I just wanted to make sure the target was hit right there. I just wanted to take the opportunity, MS, to focus on the analysis and set and walk you through how I read things, right? It's being really typical for once I take a trade, everybody just stop thinking and just start worrying. And then for bypass the fact of understanding the reason why it's behind this, MS. Okay? So that was the reason for me to just say that would be the short position earlier. That would be the initial major catastrophe stop. And the initial targets are 37, 34, 19, 16, and perhaps even the 90 down there. Okay? So I just sat here and just explained to you, right, when the momentum hits in, and obviously before it happened, why would it hit those targets. Okay? So at this point, once again, my focus is to demonstrate the power and the validation of what we do so you can apply it directly in your decision making. Once again, it's not that we didn't want to take the trade. I would. It's just that I didn't feel quite comfortable at this point for the long-term perspective being. You know, how long it takes and whatnot. So I would rather stay as an analyst and explain to you before it happens, the whole thing, and that way everybody's focused on seeing it happen and understanding it. Because in previous demonstrations days, I chose to place a live trade, and then I start getting all these questions of things that I already explained and so on and so forth. All right. Let's see. Sam said Joe got shook out with a 60. Sam, would that, Sam L, would that be 6 profit or loss? Andy got 5. No problem, MS. That's good. Okay, great job, Sam. Appreciate the okay, good. Right has got 8 ticks. Awesome. Taylor got 12 and 10. Great. You guys are taking on your own. That's really awesome. That's all I need and care about. And I love it. Next slow down. All right, 34 being hit. Next slow down, 48, 19, and 16. And once again, I'm taking the toll here of your personal analyst today, just to make sure that everybody understand and see the power of this. Sounds good? As you can see, that 37 and 34, wait a minute, check this out. You see the low? 34. Isn't that impressive? Buy the tick. The power zone right there. That power zone right there. Holding steady. 2.5 minutes left, and I mentioned that by 9:15 we should have reached our targets. It's 9:17 now. Okay? All right. So once again, I'm sorry that today we didn't take a live trade. A lot of people expect us to take trades every day, but today I decided not to do so. Personal preference again, but we're just decided to stay here and provide you with the analysis before it happened. Remember that power zone 48, 48, 37, 34, it's a power zone, strong. So we should always expect to bounce from there. All right, so as a recap though, we were able, guys, so far so good. You enjoyed the presentation today. If you were looking for a trade and piggyback just a trade and forget about the fact of the analysis, then that's not exactly what we're after, right? So, so far the analysis of the big time frame was focused on sell setups in the big time frame, right? That was my personal preference of the long-term perspective. I would say, you know, it's a huge bearish outlook, but short-term bias was bullish. We had previously the two arrows pointing upwards, but I was worried about those because of the long-term perspective. Although everything looks absolutely stunning to the upper side, I explained to you why is it that I stretched the no trade zone. And this is something that we do live manually for you, so you have a clear path and clear understanding of a level or the no trade zone. So everything is just done for you. We extended the no trade zone to the 48.93, even for the fact that we have prior important swings high that has proven to be strong resistance oppositions in the past, right? So if we would have held into the 83, this would have been a fake up move, and we would have been screwed on a fake up move to the upper side, right? Not quite, obviously, but all right. So that's pretty much our take. So we stayed aside, we understand, and then we went on and identify if the market pulls back up, when would be the good opportunity to start seeing the reversion back into the upside? So if they take the high, we can just go along with them. Well, we went on and identified the major pullbacks right here. We chose this 1, 2, 3, and came up with a 28 number of a potential pullback that we could expect from the oil market to come back down on an uptrend, right? And then come back up again and give us the opportunity that we're looking for right after the pullback happened. We nailed the pullback right here by the tick of specifically 28 ticks right there, and that was, no pun intended, by the tick right there, right? The market spiked back up, never take the prior swing high, indicating a potential failure of the move to the upper side, immediately burst to the downside, giving me kind of the giveaway fact that they're probably going to break through the lower part of the no trade zone and hit the 37.34 next 19 and 16. Market pulled back up, and we use the same analogy of the pullback, identify the best placement for the stop, letting it be there for swing trading style, worst case scenario, give it enough space for the market to do its thing. The market pulled back up, never reached that level, and provided the first support or objective. So if we were trading multiple contracts, this would have been the first place to liquidate some of, I would always lick about 75% of my positions on the first objective and try to use the last 25% of our positions to maximize the remaining of the targets, assuming that the market will sustain and maintain the trend as I think it will for the remaining of the session. Okay, so that's exactly where we're at, what we did, and how we do it every single day. Of course, if the thing would have been a little bit more beautiful for our site, I would have taken a position, but not on presentation day. All right, I don't want to look, you know, like I'm trying to show off or whatnot. I'd rather stay and provide you with what we're really good at, providing you awesome analysis for you to take opportunities and capitalize on it. All right, so let's see what we got. Any other questions, guys? Let's see. Taylor, all right, awesome. We got, I have it, concern, okay. All good? Okay, my friends. So here we go. We're going, I'm getting out, I'm waiting until 48.19 and 8 and 16 is reached, and then, yeah, I think we can call it out the day. First layer reached, 37-second immediate microversion reach of 34, and let's see if the 19 is hit. Guys, as you can see, since we just are on a transition, it's going to be a really slow process today. Prices will hit, targets will hit, but they will take their time. That's plain and simple what it is. Louis, good question. Louis asked, how do you trade or not trade during the news? You get out 5 minutes before an event, will you get back into the action? Louis, basically, here's the key. I'll have a stopwatch, and I literally wait about 15 minutes. And then I'll just carry on with the analysis. All right, Louis, hope that helps. Time is 9:26. All right, 4 more minutes. I'm waiting for the 9:30 to hit in, and then we're probably gonna call it up today. So far, so good, guys. If you got any questions, then let us know. But hopefully you enjoyed the presentation today. I know that many of you were looking for action and taking trades, but hey, you don't need us to take trades. You just need the analysis. Okay. Cornbread, you're more than welcome, my man. Absolutely. Brian, obviously. Awesome. Thank you. Thank you so much. All right. So tomorrow we still have obviously open doors tomorrow for everybody. Hopefully by tomorrow we'll get some action. But take a closer look at the market. The only one that has produced some movement today, it was the oil market, and it was awesome because at the beginning it was trying to fool us, but we knew better, right? And we were able to capitalize with it. Not capitalize. We didn't trade it. Most of you did. But it was spot on the analysis, I think. All right. So we'll see you tomorrow. Sounds good. So far, so good in terms of the tendency at this point. You know what? Let me just wait for the 9:30. Give me a second. All right. Let's just give it about 2 more minutes. And yes, this is a no trade zone right in here. This one right here, and I'm just trying to shade it right in here. Okay. That is a no trade zone. So the concept of the no trade zone is once they clear, it's supposed to maintain a trend in that direction. Okay, and that's what it means. But then again, we have this layer below where we can just show you what is in the very next upcoming support after the no trade zone. So you pretty much, if you're going to short, you're already prepared ahead of time of understanding how much profit you will have before encountering some support. Does that make sense? And same here, right? Okay, awesome. UFO drivers, thanks for the analysis, Carlos. Still short too with lower converter and tight up. There you go, UFO. Great job. You guys are awesome. All right, 9:31 is here. Let's see if they continue carrying on. The indices are just guesstimating. I think, I think the eclipse is just clouding a trader's mind at this point. Yes, Sam, definitely my stop would be on the swing high right here. Or perhaps locking in some profits, to be quite honest. Either one of these, depending. If I will be a swing trader, my stop would be tighter. And I already liquidated 75% of my positions down in there. And I would, whatever remaining of the 25%, I will draw down my stop loss right here. Obviously, or from this low, 28 ticks plus about 3 or 4 ticks above that level as a stop trailing. You know the drill, right? But if you're day trading limited in capital, you already reached some objectives here, I would move my stock to break even plus 1 tick to cover the cost of commissions. All right, that's how I see it. All right, NQ on the move, a break below 85.50 could trigger further move downs. It looked pretty decent.
Let's see. Nothing on oil at this point. Gold just shoot up like crazy. First and second layers of the target reached. Kind of late, but do I ever look at YM? YM is tanking at this point, just like going down, but I don't like it that much. Luis says, I like this comment though. Luis says, Carlos, I'm in another room simultaneously with yours, and your analysis ate their shorts. You were spot on. Thank you, Luis. Cornbread, thank you. Awesome. Okay, 9:36. Okay, guys, so this is kind of overrated at this point. Back into the no trade zone. So there you go. I think this is pretty much it for today. Tomorrow, hopefully, we can see and take some actions if we see it fit. But I hope you grasp the value and the levels and the power of the analogy and the analysis itself. How we stay out of or steer clear from hazard decisions and focus only on the tendency and the immediate potential outlooks of what the probability of success would be based on the price action and analysis, which was short on the CL. Now, once again, it's really early to call like long-term perspective, but long-term perspective in the CL for me was kind of bearish, not bullish. All right. So stay tuned for tomorrow, and don't put your money at risk. Once again, if you're in doubt, stay out. Share the love with the loved ones. Never forget about doing that. Your family, father, your mother, anybody that you really dearly appreciate and still alive, just call them up. Don't wait until it's too late. We got a couple of members here on the last 4 years, and sadly, some of them. 2 of them actually passed away, and we were contacted by their families. This is really interesting. We were contacted specifically for one lady,
letting us know that his credit card was still charged, blah, blah, blah. We always refunded, but she went out and explained to us how much he loved being with us and doing the analysis, and for the first time he was doing really good in his trading. That, it's sad that he passed away in a car accident, but it was freaking awesome hearing from somebody else that was not even one of our members telling us that. So that's how much we impacted someone's lives. And once again, sadly, he passed away. And that's the reason I'm saying never underestimate the power of time, right? Time passes by, we waste it, we don't get it back. Don't regret it. Don't regret it. Okay. Feather says, God bless all the family. I lost my son in 2012 who was 27. I'm so sorry to hear that, Feather. Now you get, once again, as a father, I feel you. And dudes, I mean, it's so important. I know that sometimes for people it's just like too cheesy. Trading is one thing, but we're trying to build kind of a community of a family here that we help each other and we support each other. For me, family is first. And if we're going to spend a lot of time together, we might as well treat you as family, guys. So for me, it's really important for you to understand that family is first and then business is afterwards. Sounds good? All right. So the market is going to be there everywhere, every time for us. We won't, right? I'm traveling to Florida on Friday to bring back her mom to care for her. There you go, Ann. All right. If you're nearby Orlando, let us know, and you're still with us. So be nice to meet as well. Feather, looking forward to chat tomorrow. When you go back and whenever we get the opportunity. Once again, SCL going down. Next level down. 48.19, 48.18. Don't be impressed by it. Embrace the information, right? And make it your own, right? Thank you, God. God bless you guys, and see you tomorrow. Sounds good? All right, take care. Bye.
Bye.